Welcome to Alpha Recap, your post-market wrap from stockalpha.ai. We closed the day with lots to unpack after markets closed, and as always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Big themes today. Dispersion across stocks, a rally in a turnaround name, and a shocker from a major software company. So, what really stands out here is how company news dominated the tape even with big macro data on the way.
Exactly. The headline was scattershot. Sector and stock-specific moves instead of a clean, market-wide trend. The Dow finished the day up modestly, while individual names did the heavy lifting.
Right. And the other thing is futures and commentator chatter had everyone keyed up for two big data points, the Fed's preferred inflation gauge and GDP. So positioning felt cautious.
Let's hit the big movers. First, VF Corp jumped after results. The stock finished around $15.85, up about 7.7% intraday after a solid fourth quarter, according to analysts.
Yeah, that tracks. VF Corp's 6-month performance was about 5.4% ahead of the S&P. That's the kind of move that pulls value and turnaround investors back into a name when operations actually improve.
And to add to that, analysts were talking about inventory management and unit economics. The narrative that a beaten-up apparel name can re-rate if margins and comps keep moving in the right direction.
Short reaction. Big move for a beaten-up name.
On the flip side, Adobe plunged after reporting earnings. That was the other storyline that grabbed headlines and reminded growth investors of duration risk in high multiple software names.
Hold on, say that again. Adobe really sold off hard, right?
Yes, the exact percent wasn't in the snippet we had, but the language was clear. The stock plunged after the quarter. When a big growth software company misses top line, guidance, or margin expectations, markets reprice those long-term cash flows quickly.
So, what really stands out here is that earnings can overwhelm macro for individual names. Adobe is a textbook example.
And that gets to the core theme today: dispersion. Company news was creating outsized stock moves, while macro uncertainty, inflation, and geopolitical risk was keeping broad positioning cautious.
Which is why you had the Dow up, but overall caution in active managers. One camp is picking stocks, the other is waiting on the data.
Let's talk macro and geopolitics for a moment. Rising oil and an ongoing week of conflict involving Iran were flagged by analysts as constraints on conviction. That amplified the caution heading into the personal consumption expenditures release and GDP data.
Right. I mean, when you step back and look at this, oil moves have asymmetric effects. They can lift inflation expectations and hurt consumer discretionary, even as energy and materials get a boost.
Exactly. The PCE price index, the Fed's preferred gauge, is more important than CPI for policy, especially core PCE that strips out food and energy. A hot print would push the market to price in higher rates and compress valuations for long-duration names.
Short reaction. PCE is the name of the game.
We should also flag a constructive signal out of China. The East China Fair generated about $2.2 billion in intent orders, and analysts read that as resilience in export demand, a potential tailwind for exporters and cyclical commodities.
Yeah, but that view runs up against the oil and geopolitical headwinds. Cyclical optimism versus macro caution. That was the big debate in today's coverage.
Which narrative wins depends on near-term data and whether oil momentum persists. If China order flow turns into hard export numbers, cyclicals could get a lift. If oil keeps climbing, inflation concerns could dominate.
Now, a detail that won't grab headlines but matters for traders. A lot of Form 8K filings landed on March 13th. Companies from Avid Bank Holdings to Philip Morris International and several smaller names filed disclosures. Regulation FD items, results of operations, exhibits that can move stock prices in the short term.
Right. The volume of filings reminds investors to read primary documents. An 8K exhibit can contain a material contract or an earnings detail that changes guidance. For event-driven traders, that stuff is gold.
Totally. And on the governance side, seeing a cluster of 8Ks can mean companies are actively managing communications, stabilizing in one sense, but potentially a volatility trigger if something material shows up.
Let's break down implications for different investor types. First, value and turnaround investors. VF Corp was the clear opportunity today. The key is persistence. Look for sustained margin expansion and inventory normalization before sizing up positions.
Growth investors. Adobe is a red flag. Reevaluate revenue acceleration, subscription churn, and margin trends. If fundamentals have shifted, trimming into weakness might make sense.
Macro and tactical allocators had the right playbook. Position for data. If core PCE came in hotter than expected, they would reduce duration and increase exposure to cyclicals that can pass on costs. If it cooled, longer duration growth could come back in favor.
Income investors should watch the 8Ks from big dividend payers. Even procedural filings can include clues about capital allocation or governance that affect dividend sustainability.
And event-driven traders? Read the exhibits. The day's filings plus China order flow created specific trade opportunities if you dig into the documents.
So, practical next steps. First, position for dispersion. With company results driving moves, active stock selection and strict position sizing matter more than broad market bets.
Second, watch PCE and GDP prints closely. Those will materially affect rate expectations and therefore valuations across the board.
Third, read primary documents. That means pulling the 8K exhibits for any filings that affect your names. Summaries can miss the nuance.
Fourth, monitor oil and geopolitical headlines. A sustained rise in oil is a structural headwind for many sectors. Stabilization would remove a major overhang.
Fifth, keep an eye on China order flow. That East China fair intent of about $2.2 billion is an early indicator. Not a revenue print, but a signal to watch.
Quick reality check. Active managers can exploit dispersion now, but broad allocators may remain defensive until the macro prints reduce policy uncertainty. So your approach really depends on time horizon and risk tolerance.
Honestly, I was a bit surprised by how pronounced the reaction was in some names. You could see both conviction and caution in the same session.
Short reaction. Pockets of optimism, broad prudence.
Let's wrap with 3 clear takeaways. 1. Dispersion ruled the day. Earnings drove outsized stock moves even as macro uncertainty lingered.
2. VF Corp's rally is meaningful for value investors, but needs persistence. Adobe's plunge forces growth investors to retest assumptions.
3. The PCE and GDP prints are the next gatekeepers for sentiment. How those read will determine whether the market leans into cyclicals or doubles down on duration compression.
Final practical note. Stay selective. Size positions carefully, and actually read the filings that show up in your names. That's been a recurring advantage in these dispersed market regimes.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the data prints to walk through what the PCE and GDP meant for markets. Until then, stay tuned and keep your positions sensible.